Thanks for joining us on this edition of Business Daily. I'm Lee-Jiun in Seoul. Before we get started, let's first get a quick check of today's highlights. There were just too many uncertainties for the U.S. Federal Reserve to pull the trigger at its June meeting, with one of them being Brexit. We'll sit down with an expert to talk about this. As trade protectionism grows ahead of the U.S. presidential election, Washington may be looking for ways to revise its free trade pacts with others, including Korea. We have these stories and more coming right up. It came as no surprise to see the U.S. Fed Reserve freeze interest rates amid lingering economic uncertainties both at home and abroad. With that, the Fed sees more gradual rate hikes in the future. Our Hwang Jae has this report.
The Federal Reserve has kept its key rate steady at 0.25 to 0.5%. The decision made at the U.S. Central Bank's June meeting on Wednesday comes as the country deals with an uncertain job market.
Now the labor market appears to have slowed down, and we need to assure ourselves that the underlying momentum in the economy has not diminished.
The Fed chair added that the possibility of Britain leaving the European Union in an upcoming referendum was also a factor in the bank's decision.
Clearly, this is a very important decision for the United Kingdom and for Europe. It is a decision that could have consequences for economic and financial conditions in global financial markets.
The Fed also predicted more gradual hikes over the next few years as it cut its growth projection for the U.S. economy to 2% for this year. When it raised rates for the first time in nearly a decade in December, the Fed forecast 4 hikes, but new projections show that 15 out of its 17 policymakers expect no more than 2 increases this year. This, experts say, gives breathing room for the BOK after it cut its key rate just last week. A hike from the U.S. now would have exacerbated risks of a massive capital outflow.
If the Fed raises rates, the best option Korea has is to stand pat with its current rate. If the BOK pushes it, it might be able to get in another rate cut.
But expectations still live on for a rate hike in July. As Fed Chair Yellen said, it's not impossible to push up rates next month. This is why experts say it might be a tough road ahead for the Bank of Korea, especially as it faces lingering risks from the Brexit referendum next week. Hwang Jae, Business Daily.
And to tell us more about this, we have Professor Kim Taewon from Ewha Women's University joining us in the studio today. So good to see you, Professor.
Pleasure to be here.
So this was a very much expected decision from the U.S. Fed, considering that its Fed Chair Janet Yellen also said last week that it won't raise rates until new uncertainties about the economic outlook are resolved. And of course, last month's job data played a big part in this. So overall, how is the U.S. economy performing?
Well, there's no question that U.S. economy is under recovery phase. But unfortunately, it looks that U.S. labor market has been lost this recovery momentum. Last week's new job creation was less than 40,000 jobs per month. But actually, at the beginning of this year, the new job creation was about 100,000 jobs per month. So last month's job creation was pretty much disappointing.
And along with those factors, Yellen also said that Brexit was one of the factors that led to the U.S. Fed to make such a decision. Can you tell us more about this?
Well, there is a actually very crucial link between the Brexit and the value of U.S. dollars. If UK really Brexits, British pounds will be depreciated, and the same is true for euro. Then almost automatically U.S. dollars will be appreciated. So that's going to be a big pressure for U.S. Federal Reserve not to increase the interest rate.
And the U.S. also, I guess, now it pressed pause for now, but with the Bank of Japan announcing that it's going to hold its policy steady today, can we say that at least some uncertainties in the markets have been reduced?
Well, there is a tough road ahead still. There are quite a big uncertainties related to Brexit that we talked about, and Chinese economic status, and OPEC's decision on oil production. And also there is another possibility for U.S. Federal Reserve to increase their interest rate in the next month.
Going along with that, what is your outlook on the future rate hikes in the U.S.? I mean, many believe that the Fed is going to raise rates once or twice this year.
Well, that really depends on the status of the U.S. economy and the Brexit. And the key issue of the U.S. Economy is the status of the labor market. But as we talked about, the new job creation was kind of disappointing, but the unemployment is at the level of one of the lowest level in U.S. history, 4.7%. So I believe that there will be a stronger momentum to recover the labor market. Then there will be at least once or twice chances for U.S. Federal Reserve to hike their rates.
This year.
Now,
coming back to Korea, the Bank of Korea recently lowered its key rate to another record low of 1.25%. Now that the Fed has decided to freeze its rates for now, how is this going to affect the Bank of Korea and its monetary policy?
Well, this time the Fed decision is a good news to Bank of Korea because they need to maintain at least 1% interest gap between United States and Korea for avoiding capital outflow from Korean market. So there is a less possibility for Bank of Korea to lower their interest rate by the end of the year.
Now, we've heard from the Fed and the BOJ this week, and the Bank of England is actually left to announce its policy. What can we expect out of that?
Well, I believe the Bank of England doesn't want to take an action on their interest rate before the Brexit. And as we have seen, the Bank of Japan's interest rate is pretty much dependent on U.S. Federal Reserve decision. So the market's expectation is Bank of England will not change their interest rate until the Brexit decision.
Then what kind of market movements are we seeing right now ahead of Brexit referendum next week?
Well, as the Brexit decision is coming close, there will be more uncertainties in the market. So there will be stronger demand for safe assets like Japanese yen related assets and U.S. Federal Reserve bonds.
Then how is this Brexit referendum going to affect the Korean economy, its outcome, I guess?
Well, that is a very sensitive issue to Korean economy. Even though Brexit is faraway country's issue, England's institutional investor is a major investor in Korean stock market, up to 8%. So there is a high possibility that England's investors can withdraw their money from Korean stocks and bonds market.
We'll definitely keep an eye on what happens next week during the vote.
Exactly.
Thank you so much for coming in today, Professor.
Thank you.
The free trade deal between Korea and Colombia is set to take effect from July 15th. Seoul's Trade Ministry said late Wednesday that the two countries have completed the ratification process and tariffs will gradually be removed on Korea's main export items to Colombia, such as cars, refrigerators, and washing machines. Import duties on Korean red ginseng, medical instruments, and a number of other items will be lifted right away. Korea will also progressively remove tariffs on nearly 10,000 Colombian goods over the next 12 years. Since the deal is Colombia's first FTA with an Asian nation, experts say both sides can expect to reap extra benefits from it. So good news on one trade pact, but there might be trouble for another. At a time when protectionist sentiment is on the rise in the U.S. presidential debate, the U.S. International Trade Commission is set to be preparing a review of the country's free trade agreements. And our Eunice Kim tells us why this is sparking concerns for Korea.
Government-related sources say a U.S. advisory agency is set to submit to Congress an evaluation of America's free trade agreements, including their impact on U.S. jobs, production, and distribution by the end of this month. Trade leaders in Korea are bracing for impact, as the world's largest economy has been logging a deficit in its trade with Asia's fourth largest economy. Since the Korea-U.S. Free Trade Agreement came into force in 2012, Korea has logged a trade surplus each year, reaching $28.3 billion in 2015. That means the U.S. has posted a trade deficit of the same sum. And in April, it recorded the worst trade deficit by month of nearly $3.3 billion. As one survey shows, the trade imbalance with Korea expanded by the largest margin among America's 17 FTA countries, the report by the U.S. International Trade Commission could be more ammunition for those hardening their stance on commerce with Korea. Donald Trump has promised to renegotiate the KoreaUS FTA if he becomes America's next president. And most recently, U.S. Ambassador Mark Lippert urged Seoul to fully implement their trade pact. Back in April, the U.S. placed Korea on its monitoring list for foreign exchange practices. And the pressure could escalate to include sanctions tied to currency manipulation charges or heightened anti-dumping taxes. Trade officials in Seoul said this week they will proactively address the forthcoming report's concerns and point to positive aspects such as America's gains in the service sector. In areas like education, tourism, and intellectual property, U.S. exports to Korea exceeded $20 billion in 2014 and 15, and were double Korea's service exports to the U.S. As Seoul prepares its case, Korea's Trade Minister Ju Hyung-hwan is said to be considering visiting the U.S. in the second half of the year to meet face-to-face with lawmakers and related parties. Eunice Kim, Business Daily.
Back on the economy here at home, fresh data from the central bank shows that Korean companies logged an average 2% dip in sales in the first 3 months of the year. The Bank of Korea had surveyed some 3,000 domestic companies with assets of over $10 million. Now, some of the worst hit sectors include manufacturing of metal goods, which shrunk by 8.4%, and of oil and chemical products, which dropped by 8%. Despite the falling sales figures, companies' profitability managed to bump up. On average, their operating margin was at 5.6%, up 0.4 of a percentage point on year, as companies work to defend their bottom line. Samsung Display is leading the small and medium-sized display market thanks to the competitiveness of its AMOLED panels for premium smartphone screens. According to data from market researcher IHS on Thursday, Samsung Display had the highest market share in the first quarter at about 30%, followed by Japan Display with 17% and LG Display with 13%. The company also saw a 60% increase in shipments and a 20% increase in sales in the first quarter compared to the same period last year. Samsung Display was the producer that saw positive growth in the small and mid-sized panel industry, which has been on a negative streak, with other companies seeing shipments and sales drop by up to 30%. As prosecutors continue their probe into Lotte Group, the country's fifth largest conglomerate, the spotlight is now on one of its key profit makers, Lotte Chemical. Our Kim Min-ji has the details.
Prosecutors are expected to dig deep into Lotte Chemical, one of Lotte Group's business units and one of its most profitable. The fresh attention is part of an ongoing probe into the country's fifth largest conglomerate, which recently saw over a dozen of its business arms searched for evidence they may have been involved in drawing up slush funds. Lotte Group's combined sales came to $58.4 billion in 2015, up 2.3% from a year ago. Lotte Shopping makes up roughly a quarter of that, followed by Lotte Chemical, which accounts for over 12%. Although the shopping unit is bigger in terms of sales and company size, Lotte Chemical is seen as more stable. Lotte Shopping posted $611 million in operating profit in 2015, down 28% from the year before. In the same period, Lotte Chemical saw its profits jump more than threefold to over $1.1 billion, making up a third of the group's combined operating profit. Experts say that because much of the ongoing investigation is focused on Lotte Chemical, it could take a toll on the company's report card down the road. The chemical arm is suspected of using another Lotte company in Japan in the process of buying raw materials to inflate prices and use that extra cash to either create slush funds or transfer those funds back to the Japanese unit. Lotte Chemical has brushed off the allegations, saying no other company was involved and there were no such orders from Lotte Group. Kim Min-ji, Business Daily.
And that brings us to the end. Thanks for watching, and we'll be back tomorrow with more business news that matters to you. Until then, goodbye.